over in Europe. We're wrestling with the fact that we're going to see growth slow in China a bit further. Whereas the U.S., we do expect a little bit of a growth recovery next year. So some of these are balancing off each other. And we're watching all of them very closely in terms of their impact on the broader global fundamentals. Last bullet there, talking about Brazil and Russia. Brazil and Russia have been a very challenged market over the last couple of years. We're finally seeing the light at the end of the tunnel, as it were. Those recessions do finally seem to be coming to an end, and they've had a significant impact on stakeholders of all types in those markets. But at the same time, while those recessions are ending, we still have a lot of challenges yet that we have to face. So here's again, our economic outlook itself in raw fundamentals in terms of the GDP outlook. I mentioned the global growth for this year, about 2.4%. Next year will be sub 3%. I think it's right around 2.7 for global growth. The U.S. market this year, from a GDP perspective, fairly underwhelming. I think we're at about 1.5% GDP growth this year. As we look next year, we see that growing to about 2.4%. This year is a bit of an inventory type of correction that impacted us from a GDP perspective. We do expect to go through that and work our way through that this year and see some improvement next year. You look at some of these other international markets, the Eurozone has been tempered. That sort of the enthusiasm for the Eurozone is tempered somewhat by Brexit. There are some impacts to that, which I'll touch on in a moment. But again, still seeing some growth there. You'll note in Brazil and Russia, obviously not very good shakes this year and last year in terms of GDP perspective, but we are starting to see some of that recovery really leading into next year and beyond. India and China, two behemoths in their own right in terms of their economic performance, growth rate-wise. China very large, of course, but we're starting to enter into that slower growth mode in China. That impacts not just the broader fundamentals in China, it impacts automotive, it impacts a wide variety of industrials, and we'll touch on that in a moment as well. From a global light vehicle sales perspective, you can see here, this year we're looking at about 90 million units of global light vehicle sales, and that's relative to about 88 million units last year. And we're looking for some more growth next year, about 92 million units, growth to 92 million units in 2017. But notice that growth rate is really starting to peak. We see that growth rate, year-over-year growth rate, really peaking around in 2019. We'll be below sort of the average growth rate, which has been running at about 3.3%, and we see the market really trailing well below that going forward as some of these more developed markets, the mature markets, continue to mature, and the emerging markets will help to accumulate new vehicle sales. As you see, overall vehicle sales certainly growing. At the same time, that growth rate is going to start slowing and start slowing further. The further out we go out in the vehicle horizon, in the forecast horizon, I should say. In this next slide here, we take a look at some of the key markets from a global perspective, some of the key selling markets, selling countries. These are the top 8 markets as we look at them, both developed and developing, or developed and emerging. And there's an interesting juxtaposition here. Obviously, the U.S. market, one that many on this call can relate to. We're a market that is peaking. We believe the market is peaking, but yet going to plateau for a while with decent sales. So actually, pretty good sales. You look at China on the other side of the chart there. Obviously, a massive, massive market that's grown a lot already, but there is still a sizable amount of growth yet to be had. And then you've got kind of a hodgepodge in between. You've got some developed markets, Japan, Germany, France. They're out there, flattish growth to even contraction, frankly, in some of these markets going forward, but they are established markets and certainly well established over time, whereas the international emerging markets, Brazil, Russia, and India, we still see some growth prospects there, but boy, there's been a lot of volatility, and that's really marked here in these bar charts, where you look at Brazil and Russia in particular, some of that volatility we've seen over the recent past, that has contributed to this, again, that multi-speed kind of dynamic that we're seeing, both on a macro scale, but even within the overall overarching automotive dynamic. That volatility has complicated matters for a variety of automotive stakeholders here in the recent past. When you add up all 8 of these countries, you get to close to 70% of global light vehicle sales. There's a few other countries that are fairly large too, UK, Italy, and so forth. But again, giving a good blend between sort of the developed markets and some of the higher growth developing markets, and soon to be growing further, offers an interesting juxtaposition in terms of vehicle sales growth, not just currently, but into the future. This next slide, we take a look at light vehicles in operation per 1,000 people, per 1,000 population, sort of the classic vehicle density. And the interesting dynamic here is, you see, as you look at the developed markets, the U.S., Japan, Germany, and so forth, very well penetrated, very vehicle rich, vehicle dense, if you will. Certainly the U.S. is number one on that scale in terms of vehicles per 1,000 people. However, when you look at it more from the developing side, the emerging market side, boy, there still is some room to grow in terms of populating the population, if you will, with vehicles and penetrating that market further. Now, there are some markets like Brazil where, frankly, we expect that growth and density to be somewhat slow. This is a market that has gone through a very significant correction, is going through it right now, exiting it, hopefully. And that vehicle density, we feel, is going to be a little bit slower on the uptick, if you will. Russia, coming out of their own downswing in their own right, but a very high average vehicle age within that country, I think rivaling around 15 years. And it's also a market that is poised to get further penetration from a vehicle perspective. Same thing with China, even more so with China, I would argue, in terms of the ability to further penetrate inland into some of those inner provinces within China. Still some opportunity there. India, we see some opportunity as a very under-penetrated country, a lot of opportunity from a population perspective, but we have a lot of needs in terms of the need to develop the economic fundamentals even further in the infrastructure. As that economic growth comes into the market, we see that need for transportation, the desire to kind of move up that mobility spectrum from walking to biking to scooters to motorcycles to cars really starts to take hold. And that's when we really start to see that vehicle density really starting to turn that story around and driving further volume. So it's something that we take into consideration highly. So this next slide, we take a look at the vehicles in operation. So it goes hand in hand with vehicle demand is the size of the vehicle fleet. And obviously this is of critical importance from an aftermarket perspective. And you can see here, when you look at it, again, looking at the U.S. versus China versus kind of everybody else, U.S. and China are very large players in terms of size of fleet. Really, U.S. number one right now in terms of the overall size of our vehicle park, 265 million vehicles, I think, on the road right now, with some growth yet to be had. But look at China. As China progresses, and again, that orange bar is effectively this year, 2016, you'll see we're going to nearly double the vehicle park in China through our forecast horizon. You say the same thing also for India. We'll be close to doubling the India vehicle park as well. So these markets, these international markets, these emerging markets, significant opportunity to grow the vehicle park, which has obviously implications for both OEM, supplier, and aftermarket alike, significant drivers in terms of opportunity in these markets, particularly in the emerging markets, as we look to grow that vehicle park. Overall, as a whole, we're looking to go from what was maybe 1 billion units vehicle park globally in 2013 to almost 1.4 billion by 2021. So there's some significant growth opportunity and potential, and particularly in some of these key emerging markets. Another factor that's been really advancing heavily more recently here is the proliferation of nameplates. And what I mean by the new models, just different model counts within different countries. And you can see here, it's been on the rise. Certainly in China, it's been on the rise exponentially. As new players enter that market, we see new models entering the market. And frankly, that's going to be continuing on for some time. We'll eclipse 1,000 nameplates in China in a given year as we get closer to the end of the forecast horizon here. So significant growth at a nameplate perspective adds complexity in terms of the vehicles you're going to look to support in that given market. One countervailing factor to this, or offset to this, is the fact that more and more of these vehicles are going to be based off of global platforms, which I'll touch on in a moment with a little bit greater detail. But that is something of a balance to that, I guess, in some ways. But at the same time, the amount of nameplate proliferation, the degree of nameplate proliferation, is definitely something that has to be monitored and managed, really. And we're not seeing that, again, decelerate a whole lot. I mean, you're going to see it go in fits and starts in given years, depending on vehicles that are launching or maybe fading off into the sunset. But even in the U.S., we're seeing new players and new entrants entering the market. And frankly, we're seeing automakers that are established automakers that are bringing out new models in white space categories they hadn't participated in before. So this is something that's both something of an impact to both developed markets and emerging markets alike, just difference and maybe in relative magnitude. Here, I wanted to add a global production slide just to give everybody kind of an idea of the scope from a production standpoint. Similar, not unlike necessarily what we're seeing on the sales side, but from a production standpoint, you can see by the time we get out to 2023, we do see the market getting close to about 107 million units of global light vehicle production, now versus this year of about 91 million units. So sizable growth yet to be had, but boy, that growth is really going to come from, again, more of that emerging market side of the equation. So Greater China contributing about 6.4 million units between now and 2023. Again, think of that further penetration inland from a sales perspective and looking to localize and co-locate as much production as possible right there in that broader China market. South Asia, when you see 4.4 million units of growth there, it's thinking India, it's Thailand, and some of those other Asian markets as well. Europe, we've got about 2 million units of growth there. A lot of that's going to be aided and enabled by Eastern and Central European demand growing. We'll talk about Western European demand in a moment, kind of flatlining a bit. There's a bit of a handoff to Eastern and Central European demand that will help support this production. And you look at South America, obviously Brazil's gone through a lot, a bit of a reckoning here recently. We do still see growth in that South American market yet to be had by 2023, so there is more growth to be had down in the future, but it certainly has been, I would say, ratcheted down a bit in some of those expectations. You look at North America, we are looking for about 700,000 units of growth in production from now to 2023. We've kind of achieved a lot of the growth that we've had already, so we've gone through very much the vast majority of our growth profile already. We have a little bit of growth yet to enjoy, but still sizable volumes nonetheless. You look at Japan, Korea, contraction about 400,000 units, and that's very much a strategic decision on the part of the Japanese and Korean automakers looking to localize and move, or offshore, I guess, for lack of a better term, production more to other markets like North America, like other Asia. And those localization efforts will definitely continue to take hold through our forecast horizon. Let's pivot a little bit and talk about sales and production for some of these key markets. And one key market that jumps right out, of course, is West Europe. And West Europe has been this sort of market in recovery over the last few years. The U.S. market has gone through its recovery mode for the last several years. Europe had a bit of a stutter step. Coming out of the Great Recession in 2009, 2010, Europe kind of had a bit of a pause, and then what we've dubbed the relapse there, where different governments were incentivizing vehicle sales, and then there were paybacks to be had. We had the sovereign debt crisis that kicked in, really did throw much of that market for a loop, and now we've been kind of progressing through actually a fairly nice recovery. Now this year we're looking for Western European sales to be up about 5.5%. Now in June we had the whole Brexit situation kick in, and that threw some of these markets for a bit of a loop. Certainly the UK market is one that jumps right out at us. So when we think about the outlook for UK next year, and frankly into the following year, it's one marked with more uncertainty. It's one marked with what we feel is going to be some fairly sizable demand headwinds. So when we think about UK vehicle sales, we see the market being down in the UK by about 8.5% next year. Now we already had the market down somewhat because they had gone through a very sizable recovery already, not unlike what we saw in the U.S., frankly. And there was going to be a bit of a payback from that, frankly, or a little bit more of a leveling off. But that leveling off has now since really been impacted negatively by the whole Brexit situation. From a broader Western European perspective, we see very little growth next year. It's flattish. There's the potential maybe for some upside in some of these other markets outside of the UK, to the extent that that hangover effect, if you will, of Brexit does not necessarily bite as hard in some of those other markets. But at the same time, we have a very constrained outlook for Western European sales kind of through our forecast horizon because some of the other dynamics that are impacting the market. When we look at the Euro 6 and Euro 7 compliance costs, the further out we go, those are emission requirements that are going to cause, frankly, the pricing of vehicles to go up because more and more powertrain content is going to be pushed into these vehicles, thereby driving up the cost, driving up the price. That is, we feel will limit demand somewhat the further out we go. We have some of the other demographic and mobility dynamics, frankly, that are impacting the market. We see impacting the market, particularly in the more metropolitan and large city, mega city type centers. We think of London, Paris, Frankfurt, and the like. And those markets are evolving in their own right in terms of mobility and vehicle ownership from that perspective. And we feel that that is going to have something of a limitation of impact on the market in terms of really fostering growth or at least a return to the pre-crash levels. We don't see that in the forecast horizon. Now, when we look at vehicle production in Europe, it's a little bit of a different story. This is a total European light vehicle production number. And you can see here in 2016, we're looking at about 21.5 million units of European light vehicle production, up somewhat from last year, up about 600,000 units or so. When we look at 2017, we see it growing a little bit further to about 21.8 million units. Not a lot. I mean, again, we've got a little bit of headwind with some of the Brexit impact, particularly on the UK sales and some of the surrounding markets, so we're factoring that in. But longer term, we do see the market growing to about 23.5 million units. And again, I mentioned earlier, we see some of that handoff in demand to Eastern and Central European countries. Some of it Russia, not all of it though. There's still a fair amount of uncertainty with some parts of Russia, but there's other Eastern and, again, Central European countries as well that we expect to start to kind of pick up that demand mantle, if you will. And some of that will be followed by production as well. We're seeing more and more capacity being phased in Eastern and Central Europe. And that, we feel, will help drive, of course, vehicle production in those markets that much further, to the point by 2023 we see the mix of about 9.2 million units coming from Eastern and Central European production, and then about 14.3 in terms of Western European production. It's very difficult to close capacity and take out capacity out of West Europe. So there is something of a limitation there in terms of how much we would expect production to contract, or at least capacity to be pulled out of the system in West Europe, at least in the near to intermediate term. I'll pivot a little bit and start talking about a few of the key emerging markets, really the BRIC markets, Brazil, Russia, India, and China, just to do kind of a review of the markets in those markets themselves. And we start off with Brazil here. Brazil has gone through, boy, a big contraction. Last year down almost 26% in sales. This year down almost 21% in sales. And really there's going to be a little bit of pain yet from a sales perspective. Next year down about 2%. But we again are finally starting to see the light at the end of the tunnel. An interesting dynamic that we're seeing here, though, I wanted to point out to everybody is we're moving from sort of a net importing kind of market to a net exporting market, if you will. So say 2016, we were selling more vehicles than we were producing. And what we saw, though, is the Brazilian government, through their Inovar program, is really fostering and incentivizing domestic production and component production and vehicle production. And that has really taken hold. And to the point of now, we do expect the market to exceed, production to exceed sales this year, and really going forward for the next several years, as on the one hand, the sales market starts to recover, but also as the Brazilian market looks to exploit some other export opportunities out there, whether it be to other South American countries or to other markets internationally as well. So we are seeing still a fair amount of investment going on in Brazil. Some of it's been maybe drawn down or rescoped downward a little, but at the same time, there still are some compelling investment opportunities, and certainly there is investment going on down there, despite some of the more recent pressures that have been on the market. And again, a lot of this is manifested in the production numbers that we see coming out in the intermediate term, in particular. From a Russia perspective, last year was a terrible year. We were down almost 36% vehicle sales, almost 27.3% vehicle production. So much of this has been predicated on the energy collapse that we saw with oil prices. 70% of Russia's exports are energy related. You can imagine the impact with the collapse in oil prices and what that's had on Russia. Has not been helped by the sanctions against the government, the economic sanctions, with the issues with the Ukraine and Crimea. No, none of that has helped the situation at all. So it has been a kind of a cascading impact almost across the board. We do expect there to be some recovery starting next year, though. So we see a contraction a little bit, still a little bit of contraction this year, almost 12% in sales, almost 7% in production, but some recovery finally starting to take hold next year. We've seen a little bit of a recovery in energy prices. So from that perspective, I think that may have provided at least maybe a little bit of a relief valve more than anything. Probably isn't anything to write home about necessarily for many of the energy producers in Russia, but at least maybe a removal of some of that pain point. And then going forward, we do expect to see some of that demand finally starting to take back off. And again, average vehicle age rivaling around 15 years, that's a positive, we feel, in terms of an enabler to demand from that perspective. We do see this market. This is one of those markets that is more of a net importing market. Some of that gap is closing as we start to add production of more, I guess, globalized, globally accepted kind of vehicles, as opposed to more local models that are unique to that country. As we start bringing on more production of global programs, global platforms, we'll start to close that sales and production gap further going forward. Next, as we look to India, India has been marked by certainly some pretty steady growth more recently. We had a little bit of a stutter step in 13 and 14 where the market contracted for a host of reasons. We saw the taper panic where the Fed kind of started talking about pulling back on the quantitative easing, and there was a bit of a capital flight out of the market that impacted. We saw leadership change where the Modi administration took over, and that started to maybe improve industry sentiment, really improve sentiment in general somewhat. And really now the market has benefited from those low oil prices. So what the market taketh away in terms of Russia giveth to India and some of the other markets that are more of a net importer from an energy perspective. So that certainly has been a boon for the market as well. This year we're looking at about 7.5% growth in vehicle sales, almost 7% or so in production. We see it growing further, frankly, in the next year. Now, these are double-digit growth next year in terms of sales. And then again, this is a market that's different in scope and scale than China, but in terms of population growth, rivals China. In terms of what I was mentioning earlier, vehicle density, very, very low. So very much an opportunity to grow into that density, or small changes in vehicle density can certainly lever up vehicle sales. So we definitely see some opportunity for vehicle sales growth and production growth in this market through our forecast horizon. Now, when we look at China, China is an interesting dynamic. Obviously it's become a juggernaut in its own right. It's the #1 market in the world. This year we're going to be at about 6.5% growth in vehicle sales. I remember last year at this time there was a lot of concern around China. We had 3 months, I think it was about 3-4 months of year-over-year contraction in vehicle sales, and there was a lot of concern. How was this going to manifest itself, not just for 2015 but 16? Well, what happened was, and we felt this even at the time, we didn't change our forecast a whole lot, because we did feel that the government was going to step in and do something. It was just a matter of, conceptually, how is that going to manifest itself? And really how that manifested itself was with this purchase tax reduction, where they reduced the purchase tax from 10% to 5% for vehicles with a 1.6-liter engine and lower. And they did that around October of last year, and really that fueled sales. And that's what we've seen even into this year. Roughly, it's amazing the vehicles you see with a 1.6-liter engine in it and lower. It's a wide variety of vehicles of all types. And then from a passenger vehicle perspective, that's roughly 65 to 70% of passenger vehicles in any given year. So there's a lot of vehicles that are then eligible for that. So as we look into the future for the rest of this year, we still see that growth remaining quite strong. All eyes are literally focused on next year, though, because that program ends at the end of this year. And we're factoring in a bit of a hangover, about 6.6% growth in vehicle sales next year. So not much to write home about, because we do feel there's going to be something of a pre-buy, sort of a pull ahead in some of that demand. To the extent that of that magnitude of that demand pull ahead, the government may do so. They may extend the program. They may look at other options. Maybe they move it to light commercial vehicles. There's been talk about that, extending it to light commercial vehicles rather than just the passenger car side. So there are some other dynamics that may impact the market. Overall, in China, though, we still see the market approaching 30 million units, so no change in that perspective. And the market is sort of equilibrating to this new normal of lower growth, lower single-digit growth. As you get to the law of big numbers, and obviously it's to get to those, when you're on a large number base, smaller growth is still going to get you some growth. It's just not the significant volume of units of growth, and really that's what we're seeing happening as we go further on and we hit that 30 million unit beyond. It's going to be low single digits growth as that market again balances out from that perspective. And now we'll pivot to the U.S. market and the North American market. So we'll talk about light vehicle sales in the U.S. And we've made some modifications there. Last year we did 17.5 million units of light vehicle sales in the U.S. This year we're looking at 17.4 million units, so a little bit of a contraction this year. We've seen it's been in fits and starts in terms of vehicle demand, and it's not uncommon when you get through a recovery mode and you get to that sort of recovery level. It's not uncommon to see these pockets where you see a 17 million unit SAAR and then maybe a 16.5 or a 17.3 or the 16.2 or something like that. So we run through that bandwidth, and that's what we're expecting, frankly, over the next really few months, but really over the next few years, sort of this plateau environment. Now, next year we do see a slight increase in vehicle sales, 17.7 million units. Part of that's predicated on job growth that we are seeing. A strong housing market is still really enabling a great portion of this market from that perspective. But even if we're talking a 17 million unit number in general, again, that's a very healthy number for this market, and that's longer term. We do see the market plateauing at about that range. Further out we go, we do see more demand headwinds predicated on a number of factors. One, we do expect interest rates to start to go up, and it's going to happen. I think the Fed just announced, as we've been on this call, that they're not going to raise rates at this particular point in time. I think we're forecasting they will in December. It's like one rate increase for the year. So I mean, it's still pretty light in terms of interest rate environment right now, pretty low. We expect that to change in the future. So that's going to be a headwind, those higher rates. Things like legislated content that we've dubbed here. We'll think about the CAFE requirements that are already out there now but are coming down the pike for later, the harder ones that are going to be more difficult to achieve. That's going to foster the need for more equipment, more content on these vehicles. That's going to drive up cost. And then we start thinking about urbanization and some of the other mobility dynamics that are impacting other markets as well, potentially starting to impact us here, impacting vehicle density, some of those other dynamics that are certainly have an impact at demand as well. I got a couple slides on segmentation I wanted to outline as well. Here we take a look at the light vehicle sales, U.S. light vehicle sales, sort of by size. And you can really see this is a market that is in a large measure a compact and mid-sized market. I mean, you look at the market right now this year, 67% is compact and mid-sized. We see that growing to close to 70% through the forecast horizon, seeing contraction in some of that full-size space. And where we saw it growing and plateauing, it's going to come under a little bit more pressure. We see subcompact had been really starting to grow, and it will start to plateau a bit, but it's become an important segment in its own right. The subcompact segment in its own right has really started to come on to its own more recently. When you think about the baby boom generation cycling out of the market or cycling down in the market, there's some of that. The millennial generation coming in, to what extent they're moving into different segments, subcompact crossover utility vehicles, and some of that subcompact space is starting to take hold. Now, when we flip it a little bit and look at U.S. light vehicle sales by really vehicle type, here we look at crossovers and cars and pickups and so forth, and you can really see here, boy, the booming growth in crossover utility vehicle is really easy to see in this gray bar here. I mean, back in 2007, I think it totaled around 19% of the market. You look at 2016, we're at around 34% of the market, and we see it growing up to 36% or so through the forecast horizon. So this has been a boomlet in and of itself from that perspective. When you look at sort of the vehicle dynamics and what vehicles are in demand, some of this has been at the expense of car, of course. That dark green bar at the bottom, we have seen car penetration contract somewhat. It was 41% back in 2007, and then even beyond 2007, it actually crept up somewhat when we had the gas shock in 2008. We saw folks moving more towards cars. Well, they've snapped back, and they've snapped back with a vengeance to crossovers. And another factor here is we've seen the advent or the genesis of subcompact crossovers. So now there are smaller vehicle sets that are in the crossover space, so people don't necessarily have to just migrate to a subcompact passenger car. They can look to crossover utility vehicles to the extent they want to get into maybe a vehicle that is of a smaller segment. So it's another dynamic that has been sort of taking the market by storm here in the U.S. market. From a production standpoint, I thought I'd note this as well. Interesting dynamic we've seen kind of play out. It's ongoing. Is really here we look at production by country. Just the sheer growth in production in Mexico is one thing that jumps right off the page here. Obviously, we've seen a lot of new plant production going on, new plant construction, and many suppliers obviously as well following down there. And when we still see growth yet to be had, frankly. So when we look at 2016, 3.4 million units of production in Mexico. We see it growing to about 4.9. We've got about 4 or 5 new plants that are still coming down the pike for Mexico, whether it be a Ford plant in San Luis Potosi. There's also BMW and Toyota, Renault, Nissan, and Mercedes joint venture. There is a fair amount of activity still going on in Mexico, but even with that, we're not looking for the U.S. to lose out a whole lot in terms of production. It'll be about flat between now and 2023. We do see a little bit more contraction in Canada, about 700,000 units of contraction between now and 2023. And I'll be quick to point out that number probably won't be as bad now. Frankly, we saw the Unifor and General Motors contract get approved here, or well, the tentative agreement, at least with their union negotiations, and it looks like Oshawa will be staying open. Our forecast had forecasted or had that plant closing, so that will add a little bit of production. And we'll probably see a little bit of production, frankly, at Fiat Chrysler as well, potentially with Brampton likely staying open or potentially staying open. So some of that's TBD yet. So that Canada number may not be quite as bad, but there is that shifting, though, that is still resident in terms of where we see growth in Mexico and fairly much a plateauing in terms of U.S. production. Again, sort of amounting to about 18.6 million units of North American light vehicle production, though. And that's relative to about 17.9 million units this year. Now, some of this is predicated on demand, obviously, light vehicle demand, but not all of it. So when we see that production going from 17.9 to 18.6, bear in mind we're in that U.S. light vehicle sales sort of plateau with maybe a downward bias. So it may not necessarily sync up in your mind if you're thinking about it. You've got production going up 700,000 units, but you've got sales kind of flattish to down slightly. Well, the difference is the import substitution that's going on. We're seeing a lot of that localization efforts I was talking about earlier in the form of automakers, international automakers, building more plants here and selling those vehicles here, so rather than importing them. So build it where you sell it, mantra definitely takes hold. And then also exporting more vehicles, largely out of Mexico, but not just out of Mexico, out of the U.S. and Canada as well, to other markets outside of North America. So that also is something of a stabilizing force to production as well. So that certainly is a positive from that perspective. When we distill it by automaker type, some interesting dynamics that come at play here. And again, this is looking at North American light vehicle production by customer type. And you'll see this is where customer targeting and opportunity targeting is so very much important, because the Detroit 3, their share of North American production is shrinking. This is sort of the reality on the ground. I would argue it's a much more profitable share, and I think to their credit, they've done a phenomenal job improving operational performance, improving profitability. But in terms of raw numbers and units, in terms of production growth, we're seeing more growth associated with the Asian 4 as an example. And even German 3, Volkswagen, BMW, and Mercedes, and some of the new other players that are coming in the mix, whether it be Tesla. It's not just Tesla in the others category. Fuji Heavy, Subaru, is a longtime player here in the North American market, but they're like going like gangbusters. They're doing import substitution in their own right with the Impreza, adding that in their Indiana facility. So there still are a lot of opportunities in this market, but boy, it's coming from maybe what would be considered non-traditional players to some stakeholders out there. So it's a matter of who you're targeting is really of the utmost importance. Quick note on global platforms. So I mentioned that earlier in terms of nameplate proliferation. Well, here's where it manifests itself in terms of platforms. Here, I just took a look at what we dub a mega platform. So a platform of 1 million units or larger, just to give you an idea of the size and the scale, and that's the green bar. So 1 million units and larger. If you go back to 2007, it was a very small proportion, if you will, back then. You go to 2023, and over 50% of the global light vehicle production market is going to be comprised of 1 million unit platforms and above. And in total, that's about 26 platforms. Now, globally, we'll be producing 500 platforms or so, because there still will be a lot of fragmented platforms out there. But a lion's share of the production is going to come from a core group of global platforms. So it's something to bear in mind, and particularly as we think about these platforms really transcending vehicle segments and vehicle types. So a global platform can go across maybe 2 or 3 vehicle segments, and can go from a car to an SUV to a van even, a minivan. And so there's a lot of opportunities that can be that present themselves with this dynamic, particularly as we move forward. Challenges, it may be in 2 or 3 different regions or more, and so that's the offset to that. But certainly volume opportunities will abound. A couple notes on autonomous vehicles. I know we promised to maybe just touch on that, and it's in the news every day it seems like, and it's out there with a vengeance. And we do have a practice that looks intensely at the autonomous vehicle development, what's going on in the market. Here I just have detailed what our outlook is for autonomous vehicles. You can see what we've done. It's not us dubbing it. It's kind of the sort of the NHTSA SAE standard, L0 all the way through L5. L4 and L5 would be your traditional, or what you would think of in terms of an autonomous vehicle. L4, it can drive itself, but it has a steering wheel and pedals. L5, there's no steering wheel, no pedals. You see, we still see this as more of a 2030 dynamic to start. Now, there will be vehicles out there before then, and you see them in 2025 and maybe even a few in 2020, but it is going to be more controlled environments, geo-fenced environments, controlled courses, or where you can control the maybe environment a bit more. Because we still have a ways to go when we think about the legislative, and certainly NHTSA just came out here recently and the federal government started talking about some of the requirements, or outlining guidelines around it. There's a lot of groundwork we have to lay between now and then, legislative and regulatory and insurance, liability, infrastructure as well. A lot of the technology has come a long, long way though, and that I'm not by any means talking this down at all, because then that's really what's identified here in this next slide. When we think about all of the technology that is being deployed and adopted is really been phenomenal. And here we can take a look at it. We can even argue in between now and that 2030 timeframe, probably the most compelling story is going to be on the pieces and parts side. When you look at autonomous emergency braking, in-lane departure warning, blind spot detection, there's a lot of opportunity in those component sectors as automakers are deploying these options increasingly in vehicles and increasingly down market within these vehicles, and making them more available even in lower trim levels as well. So huge opportunities in this space by all means. So there's a lot of opportunity in the autonomous vehicle sector, and particularly from a parts and component side and deployment of the technology to different markets. And with that, just to sum it up, again, this is very much a multi-speed kind of world that we're living in, and there are both opportunities and threats that are around every corner, and it can change on a dime. And some of the things that we're keeping our eye on, obviously, are the Brexit impact in Europe. The situation in the U.S. in terms of peak versus plateau, that's probably the #1 question I get as of late, is where we are in the market, in the cycle in the U.S., and how is that going to shape going forward. And again, whether we peak out at 17.7 or 17.5 or 17.4, it still has the markings of a fairly healthy environment here in the U.S., which still we take heart and take solace in. But it's going to be increasingly more challenging and more important in terms of who we target on in those vehicles, particularly in the North American market. Again, there are a lot of growth prospects that do still remain, but at the same time, it's going to be about either targeting the right country, targeting the right market, and targeting the right partner to go along with on that. And we see aftermarket obviously as a very sizable profit path for countries of all stripes, or companies of all stripes, just owing to the fact that the growth that we're seeing in vehicle park, and again the growth that we're seeing in many of these, particularly the key developing markets. And with that, I'd be happy to open it up for any questions.
Okay, great. Thank you, Mike. We have a couple questions here. If you have a question, please submit them now using your chat feature in your control panel. The first one, can you touch on how the election will affect light vehicle sales?
Oh boy. You know, you could almost argue it's having a little bit of effect right now. I mean, when you get into an election year, there is the average consumer starts to get into maybe a little bit of a pause mode, a little bit of a wait and see mode at times, and I think you can get that in any given election year. It may start amping up even a little bit now, because we're getting into what are we now, under 50 days or so between now and the election. So in the extreme near term, I do think we could see a little bit of a consumer impact as the consumer really tries to figure out what's going to go on out there in the market. Consumer confidence has held up reasonably well, which has been certainly very much a positive. In terms of the broader impact beyond the election, I mean, we still see the market itself and the economy as a whole as well, still setting the stage reasonably well for demand and positive for demand going into next year. Again, that GDP number of 2.4%, I mean, we still see that as positive and constructive to vehicle demand. We have to balance that, there's no doubt. We have to balance that against some other headwinds. I mean, credit availability is very strong, but one would argue it's probably not going to get that much stronger. I mean, we're already plumbing the depths on that side. Vehicle sales, used vehicle pricing, watch that. That's a metric you want to watch, because to the extent used vehicle pricing starts to come down, that can have an impact on residuals, and it can have an impact on, well, things like trade-in value. If you go in to trade in your car, next, that can impact demand as well. So we're looking at some of those other dynamics from that perspective, but still, again, on par, still taking heart in terms of even being in that 17 million unit realm from a vehicle sales perspective.
Okay, thanks. Second question I have here, how does the Polish market fit into the production globally?
The Polish market?
Yes.
Oh, perfect. So there has been some sizable growth in Poland and in Poland production. Now, I do think what you're going to see, and forgive me, I have not looked at it to the extreme detail, so I'll talk about it at a much higher level. But what we have been seeing is, to the extent we've been seeing, we do expect there to be some continued demand recovery in that market, but even more so as we've seen more production coming on board, we see that production supporting not just the Eastern and Central European market, but really supporting even that Western European side as well. So I think that from a production standpoint, it's going to be well balanced in terms of being able to support demand, not only demand for the local market, but demand for the broader European market, with even potentially some export potential outside of the European region as well.
Okay, good. We have another question here. What is your projection for convertible vehicle sales over the next few years?
Boy, convertible vehicle sales, that's been a segment, a market that we've seen some high volume players exit the market, and the biggest one that jumps out to me more recently would be the Sebring convertible, 200 and the Sebring convertible. When that dropped, that was a big volume player. And so from a raw volume perspective, it hurt. It hurt to lose that. I think we lost the Solara too in terms of the U.S. market, the Toyota Solara, so the Solara convertible when that one left as well. So from a unit perspective, I think it's going to remain under pressure in the sort of in this intermediate to longer term. We still see sort of niche vehicles coming out, and that's something that's a dynamic that's going to continue. But if Gina, if you're able to get me the person's name and contact details, I'm happy to kind of give a little bit more of a comprehensive answer with the numbers itself and circle back. I just don't have the explicit numbers at the ready.
Okay, no problem. We'll give you that information.
Yeah.
Just one more question. How will recent mergers and acquisitions in the U.S. automotive aftermarket affect the industry as a whole?
Oh, that's interesting. Yeah, there has been some very high-profile M&A activity kind of across the board, but certainly on the aftermarket side and even at the OE side. And I think we're going to see more of that in general. There's been a few interesting things I think to note on that. You know, I've been working with the financial side as it relates to automotive for many years, and you'd see at given points, you know, private equity coming in and, you know, taking big positions in very large marquee firms and things like that. But that has died down somewhat. We haven't seen as much private equity interest in automotive per se. It's there in some pockets, don't get me wrong. You've got some players out there right now that are, you know, bidding on some fairly high-profile companies. But at the same time, we've seen a lot of strategic acquisitions and strategic divestitures, both ways. And to just really refine and focus a given company's book of business, a given company's product lineup or distribution strategy. I mean, that's another one, particularly if we talk about aftermarket. So I think what I expect we will see, whether it be aftermarket or OE, we're going to see more of that strategic kind of activity at the company level, as opposed to maybe outside financial forces, outside money, as it were. Because on the one hand, many of the companies have certainly more cash stockpiles on hand, just kind of coming through this recovery, and they are motivated to really kind of lock down sort of their own strategic plans and growth plans, as it were. On the aftermarket side, I expect that to continue as well, and some of these plays more recently that have been taking hold, and I do think have the potential to kind of change things up a bit in terms of maybe distribution strategies and or you know, some of the other strategic strategies that are coming down in the next few years. I do think what we're seeing right now is sort of laying the foundation for that. So whether it be distribution, part distribution, and also moving into some other key markets as well, I think that will help foster that and hopefully and likely even help accelerate that in some of these other markets as well.
Perfect. Thank you. I think that was the last question. Thank you to Mike for that excellent presentation, and thank you to all of you for your questions and attending today's webinar. This webinar has been recorded and will be posted on the Auto Care Association website at autocare.org/industry-analysis-webinars. Our next webinar is scheduled for Wednesday, November 16th at 2 p.m. Eastern on 5 trends in 5 minutes, trends affecting the aftermarket environment, presented by Mark Singh. And you can register at autocare.org for that webinar. Thanks, and I'll see you on November 16th.